An update for the week beginning September the 8th. This is a chart of the euro, so we're looking at Forex, and of course it's not a pretty picture if you're a bull. We've just gone down and down and down ever since the beginning of May, and really there's just nothing else to add. I mean, this big red candle on Thursday on the ECB measures obviously continued this bear trend. We broke below some support here which had held just for a day or two, and of course we've just plunged. We have got this trend line, if I can just put this on a weekly chart, we have got this trend line support here which is just holding. Maybe we can have a little bounce from here this week. This is the only chance we have got of a bounce this week, I have to say. If we break below there, then we're looking at potentially, I think this is 2013 lows. I'm looking here at 127.54, which wouldn't be a surprise in the longer term if we were to hit that. Maybe even this week, who knows. Going back to the daily chart though, well, if we can hold that support, then maybe we could even bounce. I don't think we're going to bounce quite as far as this 131.00 area. That looks a little bit optimistic, but we have got some shorter term levels on the sheet, of course. And if we do break below this trend line, which is around last week's low, the 129.20 area, break below 129.00, then obviously that's going to add pressure, and we've got some targets on the daily report. Cable pound versus the dollar. As I wrote in the report last week, we hit important longer term fib support, Fibonacci support around the 162.85.80 area. Now that's held pretty perfectly. I think we hit that on Friday. Just check this low here. Yeah, 162.82. So that's absolutely spot on. In fact, on my chart, the exact fib level is 162.82. So there you go. That has held so far. I don't think we're going to get any sort of dramatic bounce back yet. Obviously we're oversold, but we've been oversold all the way through August on the stochastic, so not relevant. Don't really know why I follow these stochastics sometimes, because overbought, oversold doesn't really matter too much. You can stay overbought and oversold for such a long time. If we do get a rally, well, we've got some targets on today's sheets, today's reports, so we can follow those with some trading opportunities on there. Obviously we've got August lows down here at the 165.25 area. Well, that's a whole 200 pips higher, and I don't think we're going to get that far. We're going to need stops on any longs, ideally below the 162.50 area. It's worth potentially trying some longs there, because you've got a really sort of 30-35 pip stop, but you're going to have to reverse into shorts, I think, on a break below 162.50, because that's just going to signal a continuation of this 2 to 3 month bear trend we've been in. Gold's been heading lower pretty much as expected. It's been in a bear trend now for 2 months, so we had expected it to break lower. We broke this important trend line here. You can see this, I think, was on the Thursday, and this trend line goes back to, I've been talking about this trend line for a long time now, goes back to 31st of December of last year. I think that's important. We've held below there now for 3 days. We broke below there on the 2nd of September, and of course retested it there on Thursday and Friday, in fact. So we're failing to get back above there. Outlook remains negative as long as we hold below there, which I think we will do. Targets are on today's reports for the downside, and selling opportunities on any rally. It's not a pretty picture for gold, but I have to say the levels are working extremely well, and just trading this intraday or day by day seems to be working well. The levels are just holding almost perfectly, in fact, and there's some good money in this market. While gold has been fun to trade, offering decent profits each day on the levels, Aussie much more tricky, I would think. We're now holding above this trend line here, which I think is important. We're holding above the 200-day moving average, so it's all positive as long as that continues to be the case. We need to clear this August high at the 93.73 area and stay above there in order to build onto these 3 days worth of gains. If we start heading back below the 93.30 area, I'm going to think this is looking a bit more negative, but pattern wise it's tricky. You can see it's fairly erratic, and we were ranging through here, which I had expected to happen. Now that we're breaking above there, I've got to turn positive and see if we can continue higher and hold above these August highs. Dollar yen's been really good, always a good technical market to trade. Levels have been working really well. We've headed higher through August and the beginning of September as expected. I did warn that on Friday that there was big resistance around that 105.60, 70 area, and of course that has fortunately held on Friday. I did warn that we'd probably come down from there. We are doing that, and I am slightly concerned now that that is the top. It's a big, very key level, 105.60, 105.70. Watch it very carefully this week. As long as we hold below there, of course, an obvious statement, but the outlook will be more negative, and we've got some downside targets. This is potentially a big double top pattern. This is what worries me. I do think the dollar looks quite strong still, but as long as this double top pattern holds, we had a high here right at the beginning, the first week of January, 105.44. We've got a high last week of 105.70, so that is certainly within the realms of a big double top pattern, and if that holds, it could trigger some significant selling. So we just have to really watch that level. If we start breaking above 105.70, well, of course, everything turns positive, and you've got some targets on the reports.